Gaurav Misra, Head of Equity from Mirae Asset Mutual Fund, is also joining us on the show. Gaurav, hi, good to be speaking with you. First up, let's talk about the market direction itself, because while we keep asking what are the fresh triggers for the market right now and we fall short of answers, but the market continues to trend higher. In fact, 24,400 today. What's the view as to where the market is headed right now?
No, I mean, short-term markets could go either way, frankly, from where we are right now. But for investors who are looking at markets with a slightly longer horizon and trying to, benefit from the power of compounding, say, over the next 3-5 years, I think the trend will be upwards, such that the returns will be better, healthier than, other asset classes. But short-term, we are getting into the budget. There will be certain policy nuances. The other events globally, we're running a very tight, high interest rate regime. Those things will eventually revert. There might be some lag effect of and some possibly other consequences of all of that. So that might, have a bearing on short-term movements.
Sure. Gaurav, so given the market construct right now, wanted to understand what are the pockets that you're overweight on right now? Any sectoral themes that you think still hold value and still can be bought?
No, as a house, we have been fairly comfortable within the banking and financial space. And that's a space where clearly, we're seeing a good credit growth cycle, asset quality cycle, and there's fair amount of, a few years at least of that continuing from where we are right now. That's one big space actually where we are, comfortable with. Besides that, I would say even select pockets within the discretionary part of consumption. And additionally, if I had to add a third area, I would say, areas where there is this India manufacturing and export advantage, ranging from specialty chemicals to pharma, manufacturing, research services. So yeah, some of these, three, four areas.
Interesting. Hold that thought. Let me welcome on board Soni Patnaik, who's also joining us on the show right now. Soni, it's the day of weekly options expiry, and it seems like the 3 p.m. move is happening on the downside because there has been a fresh bout of selling in the last few minutes. We're below the mark of 24,300. What's the near-term call on the market and the index?
Good afternoon. Thank you for having me on the show. I think Nifty was on expected lines. It was supposed to test 44,400. It has done so today. It has also entered into overbought parameters as of now. So I think it's wise just to wait for a sizable correction that may happen in the index and book out the profits. And this dip can be seen towards 24,200, 24,100 range. Crucial series support is still at 24,000. As long as that support level is defended, markets may, just see a bounce back from the dip around 24,100 or so. But a good correction can only be seen below 24,000. So as of now, from current levels to 24,200, 24,100 is a range which it can get tested. And it's advisable to get into stock-specific strategy and just book out the profits from index.
Right, interesting. Soni, just wanted your opinion on two of the sectoral indexes, both Nifty IT and Nifty Pharma, and where is it that you see the momentum going forward?
So I think Nifty IT still has good momentum. It has seen decent rollovers from June to July series. These stocks in that space can still outperform. Of course, I think large cap IT space is going to hold more momentum than mid cap IT as of now. Especially stocks like Wipro and Infosys are the ones which can outperform the mid-cap IT space. So I think it's wise to hold the portfolio in large cap IT over mid-cap. And if we talk about pharma space currently, it's just today that we've seen a good momentum in pharma. If we just talk about the data points, there was a lot of mixed bag of sentiments across the pharma space. So I think it's better just to stick stock specific strategy in pharma. For stocks, you can look at for Syngene and Torrent Pharma. These are the stocks which are looking good on charts as of now.
Point taken. Gaurav, just coming back to the point that you were making on financials, and you said that as a house you've been positive on that space, but break it down for us. Private, public, insurance, financial ancillaries, NBFCs, any pocket particularly that you are favoring within the financials pack?
Yeah, sure. So in terms of some of the attributes we're seeking on quality, growth, outlook over medium term at least, and then of course the comfort with management and the valuation. So keeping all those in mind, we are comfortable with the big private banks. That's clearly one cohort. Amongst the PSUs, maybe it's more selective, where it's just maybe one or two in that sense. But yes, together amongst all these, we are putting all of them together. We are overweight. Uh, Besides that, then within the non-banking and insurance, it's a bit of a bottom up, but in the areas of life insurance, we are overweight. Think there's still a lot of structural story there. There have been some amount of regulatory headwinds there, but think those will eventually subside as the industry resets and then growth starts coming by. Then, of course, amongst the NBFC, it's a bit of, as I'm saying, a bit of bottom up there. There's some cohorts where we are a bit more comfortable in the recent times, and we are present there, more related to could be some auto and consumer financing kind of segments.
Right. The other thing I also wanted to talk about, themes that you're underweight right now on, or think that, they've sort of given all the value that they hold and have run up ahead of that as well. And it's now time to either profit take, or do you not find maybe some material value on ground right now in those themes?
Yeah, sure. So, I mean, in terms of underweights, there's some categories we have been underweight for a long while because maybe there's an uncomfort, say, on valuations related to the growth proposition, say, consumer staples. But with reference to what we would have gone underweight in recent times or, reduced positions, these would have included in the past few quarters, stocks in the defense, sector, in, select automobiles, that those kind of areas in recent times. Yeah, I mean, things like sectors like capital goods, we have been sort of underweight for a bit longer, but then we are represented in that space through other indirect plays, in that space.
Fair enough. Thanks, Gaurav, for making time and speaking with us today. So that's a view coming in from Mirae Asset Management.
If you like this video, then like, share and subscribe to ET Now.